Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing two articles, to where the first one is titled, After Earnings, is Palantir stock a buy, a sell, or fairly valued? So we're going to be going over their fair value price target, what this report says Palantir stock is actually worth, what I think the company is worth, and whether or not the points brought up in this article are valid or invalid. Next up, we'll talk about and analyze an article titled, One Green Flag and One Red Flag for Palantir Stock. So essentially, if you are a PLTR stock holder, then this video is going to be for you, because we're going to be discussing their greatest strength as well as their number one weakness right now, which you need to be aware of. So for more videos just like this one on Palantir Technologies, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents, but don't worry, if you don't want to become a member by subscribing, you're going to get this content for absolutely free. And with that being said, let's jump straight into the video. Palantir Technologies, ticker symbol PLTR, is a big data and analytics company which serves both commercial enterprises as well as government agencies. This company also specializes in artificial intelligence, which is why the company's share price has skyrocketed as of late, but recently the share price has pulled back. According to Morningstar, which is the company this stock reporter works for, currently estimates Palantir Technologies stock to be worth a fair value price of $11. They give it a 2 stars out of 5-star rating, and they say their economic moat is narrow and their uncertainty is very high. Now, although this may seem bearish, this is actually a bullish move, because this same company rated Palantir Technologies as a $9 fair value target, but now they have increased that $2 more up to $11, which is far more digestible. The first thing they highlighted is their Q2 earnings. They said that their results were largely in line with analysts' expectations. However, their billing growth was very strong, which typically implies that their upcoming revenue is going to be accelerated. So that means investors can look forward to their Q3 and Q4 earnings report, which should be rather positive. On top of that, let's focus on their billings growth. Palantir's sales for the second quarter came in at around $533 million, approximating around a 13% upside on a year-over-year basis. However, I think the positive aspect of this is, from now on, their revenue CAGR, which is their compounding annual growth rate, should rise from 13% to around 20%, depending on what analyst you talk to. So it's really good that Palantir is reporting strong forward-looking financial metrics, particularly in regards to their billings, which expanded 52% year over year to $603 million. This is mainly due to Palantir jumpstarting the rise of consumers interested in their artificial intelligence technology. And speaking of their customers, let's talk about their customer growth. Palantir's customer count was robust, growing at around 38% year over year to close to 421 customers, which is directly in line with management's commentary regarding their increased adoption of customers spending on Palantir's solutions, particularly revolving around artificial intelligence and machine learning. Palantir essentially data mines large data sets to then help out an organization or their management make data-driven decisions. Palantir, on top of that, also has very robust margins, to where their operating margins came in at around 25%, which was greater than their projected 24% estimate, which they were supposed to bring in. So by beating that metric, this really helped them overall in regards to their operations. This also allows the company to further focus on their profitability and aim for their inclusion in the S&P 500, because if this company is profitable during the next quarter, they are then eligible for inclusion in the S&P 500, which I think Palantir Technologies will eventually achieve, and this would be a monumental catalyst for this company. However, right now, the company is trading at a bit of a premium, coming in at $15.72 per share, which is somewhat of a far cry from Palantir's fair value estimate by this company of 11, because they think that this company should be trading at an enterprise value over their sales multiple of 10 times. times. And honestly, I would have to agree with them. On a fair value basis, I think this is actually very fair of this company to do. Meaning that if you have acquired Palantir Technologies stock and your average cost basis is below $11 or preferably below $9, you are set for the long-term potential of this company. On top of that, even though Palantir only brought in a 13% revenue growth rate, their revenue is supposed to grow at an average compounding annual growth rate of 23% over the next 5 years. This would be very impressive as they continue to expand their government segment and their commercial operations. I do think the company is going to further diversify themselves to be more reliant on their commercial clients, which will enable Palantir to create a more reliable revenue mix. However, I think that their commercial revenue as well as their government revenue offset each other's weaknesses. For instance, you get a lot of stability with government revenue and long government contracts, while commercial contracts are normally shorter. However, even though there is large lumpiness in the overall government revenue, their commercial clients and their contracts will more than substitute for any fallback, and vice versa, including when the overall macroeconomic economy is going through its various cycles, where sometimes commercial clients are more likely to spend money during certain seasons than others. Their government revenue is going to offset that, while their commercial revenue is going to offset the lumpiness of the government segment. So I think that these work together very well, but Palantir would still need to scale their commercial clients more efficiently to be in a primed position. Now, I also want to say why we think the company is overvalued right now. Let's look at Palantir's historic price over fair value ratios. Essentially, if they have a ratio over 1, that would indicate the company is overvalued, as you see on screen here in this orange portion. However, if it drops below a 1, that means the stock would be undervalued, making it a phenomenal buying opportunity. That's why I said acquiring this company at $9 to $11, or preferably below both of those, that is going to be ideal. Currently, the company is overpriced as of right now, even when we take their future growth into consideration. However, the company's long-term prospects are absolutely phenomenal, so it really just depends on how long you're willing to hold this company before you start to make money off of them. The lower the share price, the sooner you're going to make profits. The higher the share price you have your average cost at, the longer it's going to take to make profits. And that's essentially what you're dealing with here if Palantir works out over the long term and doesn't go out of business. Luckily, they are not at risk of going out of business at all. They have loads of cash on hand, billions of dollars, and any liabilities can be more than covered by their assets. And speaking of their assets, they have very strong intangible assets in the form of strong customer relationships and networking opportunities that the company has built over the years. Remember, Palantir has been in operation for like 2 decades, even though they've only been traded on the public stock market for a few years. And as they continue to double down on their existing relationships, this is going to reflect positively on the overall company. But now let's move on and talk about the risks and uncertainties for Palantir Technologies. While Palantir has landed high-value commercial and government clients over the years, there is going to be a problem if they ever lost one of their high-valued customers. If this were ever to happen, their share price would absolutely plummet to the ground, dropping like a stone, and their revenue would follow suit. Now, I don't think that they are at risk of doing that, considering that Palantir is leagues ahead of their competition, but it is possible, and that's something that you need to keep in the back of your overall mind. However, this author does say 2 things that I am not necessarily sympathetic to, which is, 1, they said that they found the executive team's execution to be questionable at best, so they're questioning the management of Palantir Technologies, and overall, I would disagree with them on that. I think Palantir Technologies is ran very well, and I think their management knows exactly what they're doing, which leads me into the bullish case for this company. Palantir has strong fundamentals and tailwinds thanks to artificial intelligence and machine learning. These markets for AI and ML is expanding and growing rapidly, and Palantir is going to be taking advantage of this. Now, here's the bear case. Some critics are complaining that Palantir doesn't do business with companies that are antithetical to their mission. Essentially, Palantir, if you didn't know, does not do business with any entity that is not a United States ally. They only do business with the United States and the United States allies, which honestly is why I like the company in the first place. Clearly, this does hurt their overall addressable market and their potential revenues, but overall, I really can support the mission of this company. However, the bears are right in the sense that it is self-restricting their overall growth opportunities. And then, like we said before, they complain about management, but honestly, I think these are terrible arguments against Palantir Technologies. The company is already doing very well on a fundamental basis, and management has been executing on the majority of their overall promises with some minor setbacks. So overall, the bull case or positive case for this company far outweighs the bearish negative critic case for this overall company. But we also have another article to analyze, which is going to add and color in some of this information. We're going to talk about their main green flag as well as their main red flag for this company. Their main green flag is their new artificial intelligence platform known as AIP, which they introduced and rolled out during the second quarter. This service is going to help Palantir significantly expand their customer base and increase their overall net revenue retention rates. And I think we've already seen this start to take place in Palantir Technologies right now due to these news updates. On top of that, you should also be aware that given that many businesses are taking a more cautious approach to spending during these volatile macroeconomic times, as the economy gets better, more companies are going to be encouraged to spend money on artificial intelligence, which is going to go straight into Palantir Technologies' pocket. So this artificial intelligence and machine learning trend and market, as it grows, Palantir is going to grow alongside of it. So that is their greatest bullish advantage right now. However, let's talk about the negatives. The negatives is their current valuation. This company is trading at a huge premium right now to where their PE ratio, or price to earnings ratio, also known as a PE multiple, is around 68, while their PS ratio, or price to sales ratio, is 15.28. And remember, these are on a forward basis, meaning that the actual numbers are way worse than these. Ideally, we would want their PE ratio to be around 50 and their PS ratio to be around 10. So investors may have to wait a while to actually start getting a lot of value from this overall company, but I think once they're added to the S&P 500, this is going to speed up these ratios becoming more digestible. It's going to speed up the process of their PE ratio dropping to 50 and their PS ratio dropping to around 10. But if you can acquire this company for an even lower accounting ratio, then feel free to do that. Despite Palantir shares trending downwards right now after their Q2 earnings report, I think Palantir is in their early stages of capitalizing on the artificial intelligence revolution, and it makes a sensible option to add or even look further into this overall company. The two strategies that I would advocate for this company is don't over-allocate yourself more than a 5% initial portfolio allocation to this company, and if you're planning to buy into this company, I would not lump sum into this company. Instead, I would dollar cost average. If you don't know what dollar cost averaging is, essentially, in my mind, if I wanted to spend $1,000 on PLTR stock, instead of spending $1,000 all at one time, I would break that up into maybe $100 over the next 10 weeks. Or I could even do $50 over the next 20 weeks, or $25 over the next 40 weeks. And by buying the company consecutively, as Palantir's volatile stock price goes up and down, it's going to cause your average cost basis to be averaged, meaning that you are essentially guaranteed a somewhat competitive average cost for this overall company. So remember to go and do your own research on dollar cost averaging, because there is so much material out there, and the strategy I normally use is dollar cost averaging. Unless the company just randomly drops really sharply for no reason, then I lump sum into the company. But other than that, I would love to hear your thoughts down below. Don't forget to go and annihilate that like button, subscribe if you are new, don't forget to become a member of this channel to support me personally, and with that being said, I will see you in the next YT video.